As the markets close out this rocky day, it's been something else. How can investors look past the uncertainty that is surrounding the president's COVID diagnosis and these stimulus talks, which, as Charlie Gasparino just told us, not looking good right now? I want to bring in Gerber Kawasaki managing partner Hatem Dhiab. It's great to have you here, Hatem, and I'm sorry if I pronounced your last name incorrectly, but what a day. What a day. Your reaction, in particular, to what's happened with the president, the first lady. I mean, how do you, as a market participant and a money manager, how do you manage this?
Thank you for having me, first of all. Yeah, what a week, what a day. Obviously, we wish the president to swift recovery, but we definitely don't need more than certainty. And as a market participant with the election coming up, we're really trying to kind of see through the noise and hopefully we don't get more animosity and more uncertainty with what's going on.
Well, you know, I think some question marks, in particular when the day started, were very fair. You know, will the government be running, you know, the functionality of you know, what happens if the president gets more sick? I mean, these are all fair questions, but he seems to be okay now. But now we have to talk about this stimulus issue and the fact that a lot of market participants want this package through, especially those that own, I don't know, travel stocks, airline stocks. I mean, the transports were doing better today. So if we don't get that stimulus before the election, are we going to see markets trend downward like we're seeing today?
Well, it was interesting that Nancy Pelosi said this morning that the president getting sick changes the mathematics around it. We do think that if we don't get a stimulus, the market will trend downwards. We need more help. There's a lot of businesses that are suffering, especially when you think about restaurants and really Main Street America. We're seeing a lot of suffering, and they need some kind of a PPP, some kind of help, basically, to get through, especially if we have a second wave. And frankly, with the president getting sick, we're all now seeing that there is real risk of the virus actually being here and staying here for longer term.
You know, speaking of travel and sticking with this, MGM, you say that MGM is a contrarian play. Why is that?
Yeah. So we've loved MGM for a while. They got hurt because of, obviously, then hospitality, so Vegas is closed up. But in reality, we like it because of the gaming business, because of the sports gambling, actually, especially. This is a growth area. There's a lot of money going into it. Nobody really knows how big is the market, but it's really there's a lot of growth happening there. And everyone looks at DraftKings as the player, but MGM is really the best operator of casinos in Vegas and beyond. There is, I think, 11 states that can do this. And MGM has the kind of the front seat there because they have the physical space, they have the casinos, and also they have the digital know-how and power to do this, so they can offer both a digital and physical experience with entertainment and restaurants and comps and so forth. All the things that really gamblers love.
Yeah, that's an interesting pick.
Yeah, right. We love it. It's a cheap stock. It's trading below book value.
We just showed it, and we also showed Axon and Peloton. Hatem, thank you very much. Here we go, folks. We're down 121, so we are closing down triple digits for the Dow. As you can see, a little bit of a tick lower in the last few moments.